Hey there traders, welcome back to the Ticks and Trades channel. It's been a while since I've made a video. I'm going to do things a little differently in this particular recap video. Since it's been a relatively long time since I've done a market recap and talked about the trades at the daily levels using the Ticks and Trades method, I thought I would explain a little about the process that I use and show you some things to look out for as we go back in time to review the past few weeks of market activity. I'm doing that instead of dissecting each day and talking in detail about the trades that were possible at the levels like we usually do. So what this will do is give you some pointers and some things to consider about how I trade the E-mini futures using this strategy. I'm not going into a ton of detail about how the levels of support and resistance are identified each morning before the market opens and how the levels should be traded according to a set of rules. That's what the E-mini Trading 101 course is all about. But hopefully, by letting you see the last several weeks worth of levels, game plans, and corresponding trades, you should start to see some consistencies with this trading approach. The proof is in the pudding, as they say, when we look at the tracking logs at the end of this video. You will see how playing by the rules of this strategy, you can yield some pretty impressive results. So stick around to the end where we'll pick apart the performance metrics and profit and loss data in the tracking logs. If you've been around this channel for any period of time, you'd know that we start off by looking at what I call the daily levels and the game plan for each day. That's what you're looking at right now. This is for Friday, September 5, 2025. The last recap video I made covered up to Thursday, September 4, so we're picking up where we left off. Starting on September 5 and going through yesterday, which was Monday, September 29, you will see the pre-market levels and the game plan, and then you'll see the recording of the live trades that I took each morning. Let me say first that ideally, these recap videos are posted daily, shortly after the market closes. That way, if you're following this channel consistently, you can see for each day what the trading plan was for that morning, and then see how the levels and the plan actually worked out after the market closed for the day. Did the levels provide profitable trades? Was there a loss for the day? How should each of the levels been traded per the rules? All that kind of detail is the intent of these videos. And again, ideally, you'd have one video per day after the market closes. That being said, at the beginning of September, I was working on getting some things into place to where I'd have a more open schedule to both trade and create these videos. I also had some travel and vacation time for a couple weeks, so here we are over 3 weeks since that last recap video. After this one gets posted, I'll see about getting more consistently spaced videos uploaded like every day. I know they are helpful to some viewers, and I hope you are one of them. What you're going to see is the game plan for each day, which includes the levels, of course. Then after that, I'll run the footage of any live trades that were taken for that day. There are a few days where I took no trades, but there are videos of those days anyway. In these live trade recordings, you'll see how price reacted to the levels, at least the ones in the morning. Most days I wrap up around 12 noon or so, that's Eastern time. The goal, or my goal, is to finish trading by 11:30 a.m. if possible. That is 2 solid hours, and that's really the best time or the best period of time to trade the futures, in my opinion. If no levels have been hit or no trades have been taken by 12 o'clock, the live recording video is most likely going to be shut down. Also, the trades you'll see me take aren't necessarily following the rules precisely. I do make mistakes every now and then and break my own rules. I should know better because I have plenty of data now over the years that I've been doing this to know that if I stuck to the process and did not try to invent trades, I'd probably be better off in the long run. And I would certainly have less stress while in active trades. I don't know if you can relate, but how many times have you gotten into a trade, watch it get out of the money, and then start trying to come up with reasons why you should stay in the trade? Like maybe you let it develop some more and maybe it'll eventually work out. Well, I find myself in those situations sometimes too. But anyway, now that you have the schematic, I'll let the next 17 trading days just roll on. So here are some things that I want to share. At any given point, price can go in one of 3 directions, correct? Either up, down, or sideways. So my goal each morning, as I'm looking for high probability levels of support and resistance in the SPY and other markets, is to also look for clues which of those 3 directions is most probable for the day, or at least for the morning. A couple rules that I have are when to start trading against the levels and when to stop trading. I found that if you give the market 15 minutes to settle in and refrain from getting into any trades, even if a level is hit during that first 15 minutes, you're going to be better off in the long run if you look for opportunities after that 15-minute window is open. Typically, the market is more predictable after that point. The reactions at the levels tend to work better after that window is open, through about midday or so. Then on the other side, I don't enter any trades within the last 30 minutes of the trading session. So nothing after 3:30 p.m. in the Eastern time zone. And again, if you can constrain your futures trading to the first couple hours of the regular session, you'll probably have more winners than losers. That timing works well with my strategy. So I want to go into the day with a reasonable amount of levels to trade against. So the market analysis I do first thing in the morning is to look for high probability levels of support and resistance in the SPY that if price would hit during the regular session, reactions in the opposite direction are likely to occur. And as you probably know, the E-minis or the ES is correlated. So bounces and reactions there will happen when the SPY reacts in its own market. So these are basically areas and levels where the bulls and the bears, or buyers and sellers that have conviction, will battle it out. This kind of market activity typically produces pretty good swings and movement, and I want to capitalize on that kind of price action. Have you ever noticed that when volume and market participants are average and normal, the market's acting normal, the SPY tends to stair-step in about 40-cent increments? It's not a hard and fast rule that the SPY will do that all the time, but under normal market conditions, you'd be surprised at how consistent that is. Like for example, let's say price is working its way up to a level of overhead resistance that you have on the board. This is a level that you've identified before the market even opened. So before getting there and hitting that level, price suddenly stalls out at about 40 cents below that level and kind of pulls back a little, maybe a lot. Then it builds some energy, and then it works its way back up again, getting above that first place that it stalled out. So now price is about 40 cents from your level, the original level, and it's approaching it pretty steadily. So odds are pretty good that if that level was identified the right way, and there are other reasons on other time frames that validate the importance of that level, price will react there again. It will pull back down. So if you decide to short the E-mini futures, the ES contract, against that predetermined level in the SPY, what you're looking for is at least 4 points in the ES. That's because 4 points in the E-minis is the equivalent to about 40 cents in the SPY. The chances are good that you'll see a pullback of at least 4 points. That is why a base hit is defined as 4 ES points in this strategy. It's the most amount of points that you can expect to see with a reaction in the opposite direction that also happens to be the most probable. Price can certainly pull back more than just 4 points. That happens a lot. But if you don't see any other good reasons that validate the importance of your level of resistance, in this case, in the SPY that you're trading against, just accept that 4 points will work out more often than not. So that's a quick example of a short trade that would work out as designed following this strategy. The same approach works on the long side if you bought ES contracts the moment price in the SPY came down into and hit a level of support that you identified in the SPY. A 4-point bounce is the most likely thing to happen. If you're in a good bull market and you see several other reasons that the level of support will be good, then your odds are higher that you'll see much more than just a 4-point bounce in the E-minis. All these reasons and signals and signs that I'm alluding to are covered in the E-mini Trading 101 course that I mentioned. It's about a 6-hour video-based course that I created that goes over all the fundamentals of the strategy, like how to find the levels of support and resistance, what to look for with regard to price and time to find the best areas where bull-bear battles will be fought, and all the rules to follow when entering and exiting trades in the E-minis, and some other bonus things. Speaking of the rules, what happens if the E-mini futures trade that you just entered based on the SPY hitting a predetermined level gets out of the money and stays out of the money? Ideally, you want the reaction at the level to be quick, where you pull a base hit within a few minutes. But sometimes you'll find yourself on the other side of the level, you're in the trade, it's out of the money, and it's been more than a few minutes. It might be tempting to assume you're in a bad trade in that case, and either close it out at a loss or reverse the position, which means you've taken the loss, but now you're going the other direction. But there are some rules that can help you make better decisions if you feel you're on the wrong side of a trade. I'll just say here that often timing is more important than price. And when you factor in some timing components, as well as other technical analysis, you'll have a way to identify the time and place where a trade might not work out. And in those cases, if all the checkboxes are ticked, a good option is to reverse. The market is usually giving you hints and clues that the level is not working. And if there are clues that momentum is still in the original direction, reversing that trade will usually help wash out any loss incurred by trading against that level in the first place. The details about all this and all the things that I look for is in that trading course. The other thing I want to mention is about the law of large numbers. This basically states that the average of the results obtained from a large number of independent random samples converges to the true value if it exists. So the way I like to look at this when it comes to my trading results is this. I identify the levels the same way each day, each morning before the market opens, and I trade them the same way each day. So if I followed the rules to a T, I could say that I trade using the levels the same way each day. I don't do that all the time. This is why I keep 2 tracking logs. One, playing by the rules, theoretically, if you did everything perfectly. The other are my trades, which aren't always perfect. If you say the market is somewhat random, yet this trading approach is consistent, then you can say with enough trades using the same process, you start to see averages developing. I may not know what tomorrow will bring in terms of profit and loss, but I can confidently say that if I consistently apply the strategy and trade in the same manner each day, I can expect around 80% of my trading days to be profitable. That is the long-term win ratio. And depending on the number of E-mini contracts traded at each level, my profits can be scaled to where it doesn't take very long to be able to pull good profit from the market over the long term. I think there was 1 month back in 2022 that ended on the flat line. Every other month has provided mostly double-digit returns since I've been doing this strategy. And by the way, when we look at the tracking logs, I'll point out how that metric is tracked, the rate of return. It's a very conservative approach. Any trader who is willing to put just a little more money at risk for each trade at the daily levels can pull bigger returns than what I'm posting. That's the takeaway there. The last thing that I want to point out is that since I'm doing this analysis to find levels each morning anyway, I want to make them available to anyone else who'd rather have me do the heavy lifting. Of course, the levels aren't the only thing. It comes with a game plan of kind of what to expect. These are the examples you've been looking at during this past 3-week wrap-up. Oh, also, I would suspect that if you're really serious about trying to read through the game plans that are posted here in this video and then go plot the levels yourself to double check my trades, then it's probably a little difficult to do that while I'm rambling on about other things here. Maybe it would be good to pause the video as necessary to get the information you need, or just go back and watch parts of it again so you can read the game plans more closely if you want to. In any case, the daily levels and the game plans are available via subscription to anyone who wants to trade the same levels that I trade each morning. If you do go back and study the last few weeks more closely and have comments or questions about what I've done, feel free to drop them into the comments section below. I'll be happy to help clarify. My email address is in the description below as well. Well, that pretty much covers everything that I wanted to talk about, but I see that we have maybe about a week and a half worth of recaps and trades left. And I'm sure you don't want to hear me just ramble on about things. So I'm going to find some music to drop in here, hopefully something non-offensive. So just sit back and listen to that while you watch the rest of this, or scrub ahead or fast forward if you want to. But I just want to make sure that I've covered all the days that I missed during my absence. But I do want to circle back around when we get to the tracking logs, because there are a few things I want to talk about there. Enjoy. Okay, so here we are at the tracking logs. And as you probably know, there are two: playing by the rules log, and then in a minute, I'll show you the Sam's trades log, which are my personal trades. So the reason I keep this playing by the rules log, it should be self-evident, but if you were treating every single level the same way, trading them the same way per the rules, which are explained in that course, then here are the results. Here are the theoretical results you could get. And I want to point out how this $50,000 starting balance, current balance of $131,850, where that comes from. So this is just for the year 2025. And this is an assumption that you start out with $50,000 at the beginning of the year, and you're only trading 2 contracts per level at every single level all day long between 9:45 a.m. and 3:30 p.m. Now, I know you can trade more than 2 contracts with $50,000, but this lends itself well to the risk management system that I lay out in the course. During the regular session, there's discounted margin rates. You can trade a lot more, but just to show you that if you had 2 contracts during this period of time at every single level, this is what you could have had before commissions and tax and everything else. $13,425. That's an average of $790 a day. So not too bad. I would say that's a pretty good daily average. So then if you go over to my trades during that same period of time, as I mentioned already, I didn't trade several days. You can see the ones with zeros, no trades. I had some travel days in there and just generally distracted and kind of multitasking sometimes. And I'm not trying to make excuses, but I did some sloppy trading the last few weeks or so. If I just traded 2 contracts and stuck to the rules, I would have done better than what I actually did, which is here is what I've made. Profit and loss throughout the last few weeks. Just kind of give you the total. These are their actual numbers. 6,825, average of 569. So 569, go back to playing by the rules log, that's somewhere in between 2 and 3 contracts traded per level. So I'd been better off just to take low risk trades with a couple contracts than what I do, which is around a half a dozen or so contracts. I mean, I'm going back and forth here, but let's say I did trade 6 contracts. I'm not saying it'd be easy to do because some of these were averaged in. So that's 12 contracts in play, out of the money a lot, but $40,000 over the last few weeks, $2,300 daily average, not too shabby. So I just want to point out that it's good to keep track of your trades no matter what you're doing, because it will tell a story in the long run. This is just 2025. Now, if I were to filter out the last few years that I've been keeping track of everything here, it's going to override all my notes here. So let me go ahead and copy them so I've got them saved. Well, they're all in the input here. Then it spits out the pivot table here, but let me take care of that. And then in a minute, we'll look at other years and other time periods. Starting on the playing by the rules log, the PBR, we're going to go ahead and unfilter 2025. So this is going to overlap everything I had in there. So this is the last 3.5 years, almost 4 years. Just want to show you what the profit and loss metrics are. So this $50,000 to 383 rate of return, that's January 2022. Let's go to the top. There we go. January 3 all the way through current time. So when I say it's nearly an 80% win ratio, that's what I'm talking about. 78.59%. Those are the days that end in the green. 21.41% currently are the days that end in the red. And you can see the daily averages, the average per hour. That's basically 9:45 a.m. to 3:30 p.m. Kind of extrapolated what is that worth per hour. What is the daily average worth per hour? 2022 by itself. Here are the numbers. Here's 23. This is an additive kind of pivot table, so it will recalculate those days. So in 2022, there was 178 trading days, or days that trades were taken per this strategy. Here's 2023, 184. You can see the profit and loss metrics and the averages. That was 2023. Here's 24, 225 days traded. And so far in 2025, let me scroll up to find where we're at. Here's 165 days so far traded this year. If I go over to the Sam's trades, same thing. Let's filter out, override everything, beginning of the year. So 2022 and the first part of 23 is going to be the same. But 23, starting around March or so, I started keeping track of my own trades. So 2022 will be the same across both logs, but 23, 177% for the year. Pretty decent win ratio. Really good in 2024, an 85%. This is the entire year, 85% win ratio, 253% rate of return based on my trades. This is before I started keeping track of the individual ones, trading 2, 3, 4 contracts, depends. And then so far in 25, you've already seen all that. This changed, I'm not sure why. I'll go ahead and fix that right now. There we are, my formatting is complete. You're just gonna compare the two logs one more time if you'd like. Now you should have a pretty good idea of how these metrics work and where they come from. And once again, if you want to redo this math yourself and determine how much you could afford to trade with $50,000 or whatever amount you have, and they could be micro contracts. This is the full contract, of course. Micros, you would just divide everything by 10. And then, of course, the averages, they're all divisible by 10 as well. But the point is, you can trade more than just a couple contracts with $50,000. If you had more or less capital to work with, you can just redo the math. I just think that this log and the way it's structured should be helpful to you for you to calculate your own potential earnings if you had these levels and you traded them every single day. But not to belabor the point, but these levels work the majority of the time. And if you're willing to follow a few rules, you will be paid. Starting in the next video and going forward, I intend to do the same format where I'm going to talk about the trades in detail, and then we'll talk about forecast of what might be happening in the bigger picture. But for now, just wanted to share a few things with you and get caught up over the last few weeks. Thanks for watching. And again, if you have any comments or questions, or you found a mistake or anything you want to bring to light, then feel free to do that in the comment section or send me an email. Thanks again and have a great rest of your day. I'll talk to you in the next one.